Amazon's cloud unit faces cost-sensitive customers as economic fears mount. Amazon Web Services has been the biggest growth engine for its parent company over much of the past decade, taking business from some of the largest tech vendors in the world. Peter Kern, CEO of online travel company Expedia Group, sees the cloud as an area where his company can reduce its fixed costs. In recent years, Expedia has moved considerable parts of its operations to AWS from on-premises data centers. "We haven't fully optimized the cloud," Kern said during the company's earnings call last month. The National Football League, which uses AWS to produce statistics and schedules, is making conservative plans around costs, said Jennifer Langton, the NFL's Senior Vice President of Health and Innovation. "We are not recession-proof," Langton told CNBC during an interview at AWS annual reInvent customer conference in Las Vegas this week. The league is negotiating with AWS on the terms of a renewed multi-year agreement, and there are some areas her organization wants to prioritize, she said. In some cases, Amazon Cloud employees reach out to clients to see how it can help optimize spending, said David Brown, AWS Vice President responsible for the Core EC2 computing service. At other times, customers contact AWS, he said. Before we continue, we want to inform you about India's best local e-commerce marketplace, lawfaroshop.com, is empowering Indian businesses and consumers to connect with each other. We are the one-stop destination for everything from shoes to hat, electronics to clothing, toys and more. Our mission is to create a platform that will ensure that Indian brands and businesses get the right exposure and reach the right audience in the world. With such a hefty cash balance, AWS can afford to accommodate customers in the short term if it means more business in the future. In the third quarter, Microsoft's Azure consumption growth moderated as the company helped clients optimize existing workloads, Finance Chief Amy Hood said in October. Amazon leads the market in cloud computing, with an estimated 39% share. If you're looking to tighten your belt, the cloud is the place to do it, AWS CEO Adam Selipsky said during his keynote presentation in front of over 50,000 people on Tuesday. Selipsky said that moving IT jobs to the cloud could help budget-strapped organizations save money, citing customers AGCO and Carrier Global. Last year, investors Sarah Wang and Martin Casado of venture firm Andreessen Horowitz published an analysis, showing that a company could trim its computing costs by half or more by bringing workloads from the cloud back to on-premises data centers. Amazon is trying to give customers options to reduce costs. Customers of every size have adopted Graviton, and they're achieving up to 40% better price performance simply by shifting their workloads to Graviton instances, Selipsky said. He said AT&T's DirectEV unit was able to eliminate 20% of computing costs by adopting current-generation Graviton chips. Selipsky told CNBC's John Fort in an interview that AWS teams are working with customers that are trying to become more efficient. We do see some customers who are doing some belt-tightening now, Selipsky said. One example is data analytics software maker Palantir, which said last month its operating profit in the third quarter was higher than expected primarily because of cloud and deployment efficiencies. Watch, AWS CEO Adam Selipsky on impact of slowing economy, cloud consumption.